All right, whenever you're trying to make an investment, one of the things that you want to try and judge is, are you early or late? And this can be not just with individual investments, but also into to what extent you get involved into the stock market. Also, say with something like cryptocurrencies, where it's a relatively new phenomenon and you don't want to be the last person into the pool, right? So, one of the euphemisms that we would use on Wall Street, for example, to describe earliness or lateness is to use the phrase, what inning are we in? Using baseball as a metaphor, obviously. And okay, if it's very early, you would say it's the first inning, or even, oh, say, can you see? Which is a joke a friend of mine once told me. Also, if it's the middle innings, it's not early or late, but it's something to keep in mind that you're not the first person to discover this sector, and it's been discovered, but maybe there's time to go, right? And then if we're in the late innings, say the seventh inning stretch, or the eighth or the ninth inning, even worse, or extra innings, then it's kind of time to realize that this thing is very well discovered. It might be too late in the sense that it's sort of bubble situation, or in general the sector or the investment is overvalued, or in the case of an individual stock, that the opportunity's basically gone away. It's been sort of now recognized or incorporated into the price, and it's time to maybe exit the investment, or at least reduce your exposure to the investment. So these are just sort of ways to think about timeliness when you make a given investment. And so obviously there's no obvious answer to this, because if we could always tell what inning it was in something, we'd be discussing this in Monaco from our yachts, right? But there are some things that you can do to kind of judge whether you're early or late to a given investment. And part of it is to pay attention to the people around you. I like to group kind of the people in my world as people who should know about something and people who should not know about something. So, for example, somebody who is in the investment domain should know what a SPAC is, or should know that, say, Coinbase just did its public offering just the other day. For example, in the 1990s, we had the analogy with the tech boom. There was an era towards the end of that boom where people who really shouldn't typically be discussing the subject of tech stocks, they were. And so this was when you sort of had reports of, say, your taxi driver pitching ideas like Oracle or Pets.com or whatever, or you would see in your barbershop, they would have a TV screen with CNBC rather than, say, ESPN, right? So this is when you can kind of judge that a sector or an investment theme has heavily proliferated through our culture or through our population, and then it's probably very, very late when that happens. So you can sort of see the 2 points on the spectrum, right? Where it's too late when you're starting to hear about some sector or some investment idea from people who normally would never talk about this stuff. But it is pretty early when the idea or the concept is known and people in the know are talking about it. Okay, so this is one way to kind of gauge earliness or lateness. Another thing to do is to look at the media and look at the kinds of pundits or experts, and those two things are not the same, right? The types of people that are put out in the media to discuss, say, a given sector or a given movement in the stock market. So you tended to have, in the late stages of the tech boom, you had a lot of managers of tech funds that had great performance, obviously, because the tech sector had been booming for many years. That was the bulk of the conversation on financial media. A lot of it was focused on tech stocks, and nobody wanted to own boring dividend-paying stocks or pharmaceutical companies or REITs or whatever. 80 or 90% of the discussion was on technology. And this is another indicator, for example, of earliness or lateness. When the financial media isn't really covering something, okay, that's a cue, right? Now, Bitcoin is kind of an interesting example because we're getting to judge this in real time. And if you, say, look at footage of CNBC or financial media, they do talk about Bitcoin. So I wouldn't say it's early from that standpoint. However, a lot of the people that are brought into financial media tend to be not particularly well informed in many cases, not always. Also, maybe parroting relatively obvious talking points. So, for example, the other day, the New York Times ran an article about Bitcoin and about the energy consumption of Bitcoin, and it was a malinformed article. So if you start to see, for example, well-informed articles that are really incisive and are capturing proper talking points about an investment sector, that tells you that the media has discovered the idea. And of course, in order to judge whether an article is malinformed or well-informed, you need to be better informed than the media article itself or than the reporter. And that can be a difficult hurdle. So this one can be a little bit more difficult to judge. But the whole idea is, what is the media saying and what is their bias or what is their angle? And also, you can judge bullishness and bearishness in the media too. And one thing that was sort of sobering to me in the years following the great financial crisis, so after 2008, 2009, when the crash happened, in the years that followed, this is back when I still read the Wall Street Journal, which I don't bother with anymore, but the Wall Street Journal actually was quite bearish. Most of the articles, the context was negative, the news was negative, it was bearish, even though it's supposed to be more independent and not biased, right? But in general, you just got a sense of bearishness from the newspaper and the way articles and quarterly results from companies, the way things were framed. And that was a good indicator that it's early for the stock market after this crisis because the media is still bearish. Remember, when we're late in a cycle, there's not a lot of people calling for bubbles or saying that it's overvalued. Usually, those people are kind of drowned out. The Chicken Littles are drowned out by the enthusiasm that everyone else has. So when you're hearing a lot of people saying, for example, it's a bubble, that probably means it's not a bubble, counterintuitively. So these are just things to think about. It's not easy to know precisely what inning it is. Obviously, it's a metaphor, but it's just a way to think about earliness or lateness. And in Bitcoin, we're seeing an example right now where we can kind of gauge the level of enthusiasm of the media, the degree to which regular people are talking about Bitcoin or Coinbase, for example, and the earliness or lateness we're in. And, I guess if I had to bet, I would say we're kind of middle innings with Bitcoin, and this could go for a while, but I don't know for sure. But this is sort of the way I think through it to try and judge earliness or lateness. All right, thanks as always for watching.